All right, welcome back for the episode of Carnivore Trades. Today is Tuesday, November 1st, 2022. If not done so already, give the video a thumbs up, like, comment, subscribe to the channel. Come find me at carnivoretrades.com for swing trading alerts and analysis. Real quick before we get into it too, I just want to let you guys know, as per a few recommendations and really just time and value, the price of the courses is going to go up here pretty soon. So if you want to lock in lifetime access to either the Carnivore course or the Cycles course, do that in the next couple of weeks. Right now, they're only $4.99 and $4.49 a piece. Just so you're aware of that. They pay themselves. Ask anybody who's taken them, they pay themselves off in the very next day. The amount of value that's in that, and there's not to mention the especially in the Cycles course, you get the bonus of my forecast for the next decade, which is mind-blowing stuff involved in that. But anyways, encourage you guys to sign up if you've been thinking about it, and lock in that lifetime price. Anyways, let's get into the markets here. So nice little kind of a gap and crap day here for the spiders. So gap up into that 390 handle, and then we really just kind of fell all the way up until about the 11:30 time frame, and then just kind of bear flagged here intraday. If we flip over here, we can take a look at the hourly. So just a gap up, and now kind of just bear flagging here on the hourly time frame. But believe it or not, this is almost, it is actually kind of what I would want to see if I was bullish. What I mean by that is, if I was bullish, I wouldn't want to gap and go and have us close up at 395 or something like that on the spiders, because then that's going to make it's almost like a stock rallies into earnings. You got to think of tomorrow, the FOMC, that's basically like earnings for the stock market, right? And when a company rallies up into earnings, it makes expectations that much higher, and it makes it that much higher for them to beat. Likewise, when a company's beaten down like crazy into earnings, a lot of the time you'll see a reversal and the stock can rally back up. But in this case, I think the bulls actually wanted this little bit of a pullback. Maybe some bears have kind of gotten on board. It was getting a little too one-sided here. So you actually kind of want to see expectations a little bit lower. And what the catalyst this morning was, we were already starting to fade anyway, but right at 10 a.m. we got some manufacturing data that came in hotter than expected. So that was your kind of catalyst for further downside. But you got to think about it this way, right? Like, is this one manufacturing number going to change the Fed? The Fed's mind has probably been made up for the last week or two, right? So unless it was like a ridiculous number, it's not like they're going to change their mind on what they say tomorrow. So better for the bulls to just let the algos kind of give a knee-jerk reaction to the data and give us kind of a bearish look going into tomorrow, especially if we were to like gap down or something like that. Now, the one thing I wouldn't want to see is I wouldn't want to see it below that 50 moving average. Now it's only 3:30 p.m. So unless we really dump out here, that's not going to happen. So that's a positive too. But you have strong technical positioning. Really, given Friday's rally, that gave us good technical positioning. We're above the 50 moving average. So that gives the bulls room to put in like an hourly or a 4-hour higher low. You can see the same thing here on the ES. So same thing there. We are kind of flirting with that trend line there. So we'll see how that reacts tomorrow. Again, we don't have any confirmation above that as we closed above it, but never really confirmed it with a follow-through move. So it's a little bit neutral here. I'm mostly neutral going into tomorrow. Neutral to positive is kind of my bias here in the short term. You guys know that. I think they have an agenda. They want to push us up into the election, or at least keep us afloat into the election at the very, bare minimum. And then again, to show you one more time, spiders, again, that inverse head and shoulders, there's your target up there. And again, you can make a case that, you have this back-sloping trend line or upsloping trend line to back test that. Also coincides with the top one going all the way back to the all-time high. So, and then of course the 200-day moving average up in that area, and I believe, not quite there. I was going to say 50-week. It's getting up there. Yeah, it's all right. Yeah, it's up in there, the 50 moving average. So that's down sloping, and yeah, if you were to go up there, that probably would meet in that area. So that would be if you went up into that area without any pullbacks, that would be a stone cold short level. But for now, we're just projecting here. Overall, market's pulling back. I do think this price action favors the bulls a little bit. Again, you don't want to see us just go uncontestedly higher into the Fed. It's going to make expectations too high. And I don't think the Fed's really going to say, they're not going to say like, yes, we are going to pause, or they're not going to say, anything too dovish. This is just my opinion based on what I've read. I don't think they're going to say anything too dovish, but they're going to say something to the nature of data dependent, pause if necessary, something of that nature, and the algos will probably freak out and buy because of that. So that's kind of my thought process going in tomorrow. If not, there's still room for a higher low here. So that's kind of the positive here of being back above that 50 moving average and that big squeeze candle that we had on Friday. So that's really the look that we're seeing right now into the market going into tomorrow. And obviously tomorrow's close will tell us a lot more. So we'll be ready for that. I'm going to try and do a live stream tomorrow for the FOMC. So we'll see if so if you guys want to come in for that, should be a good time. But anyways, triple Qs here. Again, much on the weaker side, down 93 basis points versus the spiders down just 33. Semiconductors are holding up relatively well, though, up 1% on the day. Meta is actually having a nice day as well, up 2.6%. Actually, day traded this a little bit earlier. This was showing a lot of relative strength in the morning compared to the rest of the market. So maybe a little bit of seller exhaustion there. But again, NASDAQ 100 still on the weaker side. IGV there down 1% on the day. So down more than everything else. And again, back testing that trend line. So that head and shoulder neckline is holding up on the IGV, although it's still, it held, but it's still minor, if that makes sense, because you're still kind of consolidating. As long as you hold this range here and you stay above that 20 MA, this could all be considered as, bullish chop, right? So this is, it's hanging in there. Okay, you did get a rejection there, though, for what it's worth. But take a look at the volume. I mean, that to me is just the algos saying, hey, this is resistance. There's not enough buyers to push it through. And it's just a reflex reaction to me at this point. So IGV, it's hanging in there despite the good reversal. But semiconductor showing some strength here, up 1.1. Little gap up, and that's been positive all day long. So that's definitely a positive for bulls going into tomorrow, although the triple Qs themselves definitely on the weaker side and not a really pretty looking daily candle, engulfing yesterday's little inside day there. So not the best look overall. Russell 2000 here gapping up. This is positive again. Russell continues to kind of be a leader. There's a lot of resistance up here though in this area. You have that gap window, 200-day moving average, and you're going pretty much straight up into that without any pullback. So the Russell looking a little stretched here in the short term, and then there's that big fat gap right here as well. So if you were to get up into that area, that would be pretty stiff resistance there for the Russell. As far as the diamond is considered, I'm also watching this downsloping trend line here. And if you follow the Dow futures, you can basically see, I had this on here previously, but you can almost make a case, and this is sort of the art of technical analysis, right? Where there's that trend line, and then there's this one. It's not really much above it. So which one do you want to go with? It really kind of depends here. Either way, they're both kind of valid to me. Either way you slice it or dice it. Anyway, so we talked semis, IGV, Dow transports here. Red, just like everything else, down 58 basis points at a sell-off. This has actually recovered a lot better than everything else. And notice how it's just kind of hugging this trend line here. So if we look on an hourly, you can see it's really just kind of grinding up on that trend line there. And it looks like almost the algos are just kind of keeping it right in that area. And it's basically just hovering right on that 100 moving average. I don't see any real problems here with the Dow on the daily. The weekly, it's got a lot of resistance there at 14,000. So just keep that in mind. Interest rates here, 10-year continuing to be resilient. So we had that gap down this morning. And look at the intraday. It just came roaring and soaring back. And now you're making bullish consolidation here on the hourly 10-year. So 10-year is holding up okay. And I don't really see any problems. You almost have kind of like, I wouldn't say conflicting signals. I mean, this is, you're seeing kind of it's basically like an inverse relationship here. So if the dollar index, up move, just following rates, and then sideways consolidation. 10-year, gap down, up move, sideways consolidation. Spiders, up move down, and now sideways. So just that inverse relationship there, and that's really been the case for quite a while. Dollar up, bonds down, stocks down, and vice versa. But you see the 30-year in any case, without getting too long-winded. The 30-year here, holding that 20 moving average, getting a bit off of it, down 1.9% on the day. But again, it continues to be resilient. The big problem here to me is, again, the 2-year, down 11 basis points. This just shows absolutely zero relative strength here. So that is definitely a problem. And this is something the Fed's going to have to key off of because they have to get the Fed funds rate in line with the 2-year Treasury note yield. And the more this goes down, the farther, the more work they have to do, which really decreases the likelihood of them saying anything significant as far as pause talk. Or, again, that's why I think that it's going to be more of a, if they say anything pause related, it's going to be more of a vague kind of, hey, we could do this, we might leave the door open for this, but they're not going to say anything concrete. And I think the market is expecting them to say something concrete. That doesn't mean we won't rally if they just say the word pause. The algos will freak out about that, I'm sure. But again, the 2-year is really telling the whole tale, and this is really, honestly, the only chart you need to look at moving forward here. Anyways, XHB continuing to chop sideways, so a little bit of a dip today, down half a basis point, or 0.5%. Nothing really significant going on there. Same thing with ITB, BNQ, real estate gap up, and it is negative. Again, right into that gap window around 84. I said that was going to be resistance. Stalled out there, high of the day, 84.13. It's now sub 83 right now. Again, if this consolidates sideways, though, this can move higher. If not, then that 50 moving average should be major resistance, as will that gap fill around 85.50 there. XLF here, again, continuing to be a strong horse. So up moving. Now you're starting to show like possible little micro inside pattern here. It's still really early. It's only 2 days in, so we can't get too excited about it. If we popped up into that 200 moving average tomorrow, that would probably be, that will be major resistance, especially when you consider the pivot high around 34.82 right here is right in that same vicinity. Red bar sell-off. There's a ton of resistance up there on XLF. So if we were to get kind of a knee-jerk reaction, a euphoria move in XLF, that could be kind of a short-term blow off top there. So be aware of that going into tomorrow. And XBD here getting close to double top as well before pulling back here. But this is still holding up really well. And yeah, what can you say? Higher highs now on the XBD, and it is held up really well here. Crude, again, nice day here. So crude, we're starting to see possibly an inside bar pattern here on crude. I did clean up some of those trend lines. I think a lot of them are kind of getting invalidated here. But we do have this one down sloping. It is possible inverse head and shoulders. It is not triggered yet, so we won't entertain it too much yet. If it triggers, then it triggers. We need to see follow through on it, but you do have a micro inside bar. We'll see what happens. I'm not sure what they're going to do here. Again, I do think there's incentive for them to push this down one more time into the election. And if the Fed says something about pausing, maybe that causes energy to sell off. Maybe it causes yields to sell off at least for a couple of days. So that kind of positive relationship with yields up, crude up, could kind of break down a little bit. Again, this is just speculation here, but for right now, you do have a micro inside pattern there. On crude, we'll continue to watch that, and again, the levels have not really changed. Blue trend line is kind of your max downside. I would be a buyer down there. Short term, 95 is going to be a level, and then of course that 200-day moving average also coinciding with that pivot top around 97, 98 bucks there would be your resistance on the upside. XLE continues to be a powerhouse, up 93 basis points. Getting closer and closer to double top, but the more this continues higher without any pullback, the more extended and the more likely it's going to have a pretty violent reaction off of that double top. I am seeing some signs of distribution here as well on the intraday. So just be careful with XLE here. XOP as well. XOP is a little bit in better shape from not technical, I guess. It's not as overbought. You had a nice move up here, zigzag up, and now you're kind of just consolidating beneath resistance. So I don't have a problem with XOP here. Really, I just think XLE and OIH are really the ones that are especially extended here. OIH gapping up today and then selling off again. This is classic distribution here. So you get very extended, you start to sell off, and then they let it kind of come back up for air. You've got good volume there on the sell candles. The green candles are much lighter as it kind of floats back up. Then you gap up and sell off. So we're seeing a little bit of profit taking here in some of these energy names. Still a strong sector. I still like them long term, but short term they're just way too extended for me to be bullish on any of these. Nat gas here. We did sell our second half of nat gas, so easy trade there. Made a little bit less on the second half than I would have liked to, but really the thought process here is that this could easily, that's a pretty good reversal candle today. This could easily, come back down here and test 525, maybe even $5. It does look like they're trying to save it here in the last, see, we got an hour and 15 minutes till the 5 o'clock close. So it looks like they're trying to save it up here a little bit from being a completely engulfing reversal. That would have to close above 582. It's basically right there right now. But overall, nat gas, I still like it big picture, but got a little extended overbought short term. I thought it would fill this gap here before pulling back, but sometimes, you know, this is a really obvious gap. I bet you everybody was probably looking at that, and that's probably why it didn't fill. You can see it got within 7 cents of that gap before it pulled back today. So, you know, that's just the break sometimes. But either way, it was an easy trade for us. We made nice money on both halves of it. We talked a little bit about the dollar here. Not too much. You know, it was basically flattish to positive today after the move down. Again, a little inside hammer today. It's holding the 50 moving average. Weekly is still fine. Nothing's really changed there. The Fed could cause a dip tomorrow. Who knows? I mean, honestly, all I can tell you is support is this pivot low here, and that's still good support. And then, you know, resistance, you've got a lot of real estate up to that 114 area. So that's kind of your major resistance area. Maybe a little bit at 112 here, but I wouldn't consider that as a major level currently. Gold here, not really too much to go off of. Again, the rallies are getting weaker. The sell-offs are getting stronger. I do think this gets close to a flush here. We're getting closer and closer. Tomorrow, you know, the Fed says pause, it's going to rally. Okay, that's really what it comes down to. But can it make a higher high? Can it make a trend change? Can it get above the 50? Those are all things we're going to have to look at here. I mean, it's got to get through 1675 first. I mean, it's got to do that first before we can even talk about anything else. But for right now, you know, it's holding up at the moment, but not a great move here, not a great technical look here. For gold, silver is much better, 2.73% gain on the day. And again, in little inside bar, 1, 2, 3, 4, 5, 6, 7 days. Nice pop with volume. It did, you know, back off of the highs, but if you take a look at the intraday here, I'll just use the SLV because it trades the same as the spiders, but we gapped up, sold off, and now we're kind of just, you know, we kind of held. We didn't make lower lows, whereas the spiders gapped up, sold off, and just kept selling, and now it's kind of just making that bear flag. So SLV and silver holding up a little bit better, relatively speaking, than the market. There will be a little resistance around 1850. We basically tested that today. We'll see what the Fed says tomorrow and see if that can get us through that. Platinum holding up okay again. I like the pattern. It's just too close to resistance for me to buy, but platinum holding up okay. Copper also getting a bounce off of that trend line as well. So that is at least in decent shape for now. Nothing really too new to add there. And then lastly, Bitcoin. Bitcoin's starting to show, again, a little bit of an inside bar here. So here's your power bar. It's not that much of a power bar. It's kind of weak, but it's something. It's more than you've had for the last couple of months. Then, you know, 1, 2, 3, 4, 5 inside. We'll see what it does tomorrow. If the market likes it, this will probably get right up to 22,000, maybe higher, especially since there's probably some shorts to get squeezed. Ether also as well. Up move, little stair step, and then up again, inside bar there. So this has legs to 1800 again, but it's all really going to depend on the Fed. And then, of course, our favorite, everyone's favorite, Dogecoin. I'm only covering this because it's really squeezing right now, but up another 8.5% today, although it did back way off the highs. So it got all the way up to almost 16 cents there. But again, look at those trend lines there, going all the way back to June 2021, and that's where it's stalling out. Right now, I mean, it's hard to say. It's parabolic, it's squeezing, and that's just the nature of it. But Bitcoin and Ether showing pretty decent looks here on the daily time frame. So we'll give them the benefit of the doubt for now, especially if the general equity market holds up okay. And again, targets here, 4,000 or 400 on the spiders would probably coincide with that 22.5 area, maybe 18,000 or 1,800, excuse me, on Ether. So we'd be looking for that possibly tomorrow. Anyway, spiders close in 10, 12 minutes here. We're holding up. We do have a bear flag look on the hourly into tomorrow. So we'll see if they gap us down and test that 50 moving average. And then really it's going to come down to the Fed tomorrow. If at any point we break 378 or 380, really, that would be a huge concern for me. And yeah, I don't think we could really, I mean, that's a long way down. So 385, yeah, if we broke that from here, that would be kind of concerning. And this market would be very vulnerable. On the other side, 390 is probably where your gamma is tomorrow. So those are kind of the levels to watch there. Anyways, guys, going to wrap up here. You guys take care. Come find me at carnivoretrades.com. I'll talk to you guys all tomorrow.